All right. Good afternoon, ladies and gentlemen. Thank you all for joining us today. Before I begin, I'd like to thank Finastra for working with Fintech News Singapore to organize this session, and also to thank all the panelists for taking time out of the busy schedule to join us and share their knowledge with us today. Actually, it's quite amazing to see that over 1,000 people have actually registered to join us. And this just shows how much interest there is into this topic and the renown of our panelists that people are interested to hear from them today. Yeah. So before we begin, just a little housekeeping. All the engagement tools you see on your screen are resizable, so feel free to move them around. There's also a Q&A segment as well. We're going to try to keep this organic, so feel free to ask any questions as we go along, and we will try to incorporate it into our conversation. But because there's about 1,000 of you, we may not be able to answer all your questions, but we'll try our best. Otherwise, you can email us, and we can try to address it the best we can. So Digibanks, virtual bank, neobank, challenger banks, depending on where you're from, they all call different things. It's arguably one of the hottest trends in fintech right now. In UK alone, about 15 billion pounds has been given out in loans. In Latin America, you see that new bank in Brazil has raised over 1.1 billion US dollars. Closer to home, we see that over 250 million unbanked population in Southeast Asia, with very high mobile penetration of over 100% in various countries. We look at Korea, Hong Kong, Singapore, Philippines. Did I say Singapore? Also Singapore. Each already have their own regulation or is already working towards a regulation. So within Singapore itself, the Monetary Authority is looking to give out 5 licenses, and 21 entities are bidding for this license. And out of the 21, we have 2 very interesting ones joining us today, Razer Fintech, Matchmove, and we also have 2 experts sharing in this session today. So I guess the first topic of conversation, we can't really avoid the elephant in the room. We kind of have to talk about COVID-19. Well, COVID-19 is probably one of the single largest catalysts for digital adoption that we've seen in our lifetime. At the same time, we're also seeing it delay virtual banking launches in Hong Kong. It's delaying assessment periods in Singapore. And there's been reports of growth rate drops between 18 to 36% for banks like Monzo and Revolut. So my question for the panelists is that, in your view, do you think that COVID-19 is a bane or a boon for Digibanks, and why? Anyone who would like to take the question can go ahead and take the question.
Sure, this is Anand from Finastra. First of all, good afternoon, good morning, wherever you are. And Vincent, thank you so much. From my perspective, when I run retail, digital, and cloud banking at Finastra, I see this echoes past inflection points in technology and what has happened to the economy. In 2008, for example, that crisis, or the prior crisis to that. It's a bit of both, right? There's going to be, interestingly enough, we know the long-term secular trend is going to be towards digitization and digital worldwide. And ASEAN and everything else is no exception. In fact, it is going to be faster than now. The more you can do contactless banking, the better. So that is going to be no matter what. And in fact, that secular trend will be accelerated. So there's great potential for digital banks and digitization. That said, to your point about Monzo and Revolut and the fact that transactions have declined, well, transactions have declined in the last 6 to 8 weeks is because consumers are spending less. It's a very simple corollary. Worldwide, we are all locked down. We are not shopping. We are not doing as many transactions as we are, right? So that transaction volume decline has to do with the lockdown rather than anything else. And once that the lockdown gets lifted, I would actually argue that digital banks will see the uplift faster than traditional banks. So I think overall, it's a boon in my view.
So you predict there will be some revenge spending, as they say.
Revenge spending and uplift for digital banks in particular, because that's contactless bank. be the norm.
Yeah. Great. Thanks for sharing your view, Anand. Would anyone else like to chime in on this particular subject?
Maybe I can
hi,
just add.
Vincent.
Firstly, thank you. Go ahead.
Yeah, hi, it's Andrew here. Sorry, talking over each other. Yeah, so just to add on it, I think it is really an interesting timing thing. I think it's probably a better position for the banks who are not, the virtual banks who are not yet in the market, because all banks are going to have a pretty tough time over a period of time, particularly as credit conditions and the affects the economy and people deal with credit issues. So I think there's probably going to be some windows which emerge, which will be really good market entry points for those virtual banks, particularly Singapore and Malaysia. While it might be frustrating right now to have the market entry delayed by the regulatory moves, it may, over the long term, actually create a better opportunity in terms of the market entry and do so at a time when the market has started to rebound without having to kind of weather the storm of what's going to happen over the next couple of months.
Sure. Thank you for that, Andrew. And Nisha, you wanted to add in your views as well?
Yeah, so just to chime in and echo essentially what the panelists have said. So we've seen essentially an uptake on our platform on balance, because on one hand, as you rightly said, consumer spending has gone down because everyone's in lockdown. But you still need to make essential payments in terms of sending money back to your family. Businesses still need to pay staff digitally where they normally would pay in cash. So on balance, we are seeing, an uptick in terms of volumes through the platform, just across perhaps different use cases. And ultimately, these all cements the drive towards digital contactless, and in some ways helps build that trust, which has always been, I guess, that stickiness factor with consumers. Do they trust digital banks? I'll use it to pay, but when I store my money digitally online. But all of this is helping build that trust and confidence, because you are, through digital means and platforms, able to help consumers and SMEs effect critical and essential banking services. So to me, I think it's a great boon.
All right, great. Thank you. And Edward, do you have anything to add to this?
Yeah, I think on COVID-19, the actual elephant in the room is that it's a tragedy. And we should be thoughtful and mindful that many people are being impacted around the world. And so they are in Southeast Asia and Singapore and Malaysia. There are jobs being lost, there are businesses who run out of funding, their families being impacted, and some people even suffer more serious tragedies, right? So I think this is a time to not only look at what digitization do, and I agree, this is a moment, I call it, this is tax moment, this is digital's moment, but also as important players on the market and stakeholders, it's a time also to help and give back. So what we have done, you have seen already in the press some of our initiatives. We have launched an investment fund to help fintech, and the details are public. We have built a line to manufacture masks in Singapore, although we're a gaming and a fintech company. So that's our way to give back. And I think as a digital bank, the race is going to conclude hopefully this year. Let's hope this doesn't drag out for too long. I think that digital banks will have a big role to play, because as you know, nobody wants to go to a branch. Nobody wants to meet a financial advisor or an insurance agent. So in a way, it's not only an opportunity, but it's also a responsibility for us to provide the right platform and the right user experience to our customers.
I think that's a very salient point, because I think sometimes we get stuck in our own bubble. We view things from the lens of the fintech world and startup world. We often forget to consider what a real human tragedy this is. But yes, thank you for bringing that up. And thank you also for the initiatives you've done to support the fintech industry at large. Moving on to the next question. We have a question here from one of the audience. It's a gentleman from Jumio. So the question is relating to the profitability of banks, right? So what the person is alluding to is that we have all these very hyped up banks, but quite a number of them aren't actually profitable. So his question is to Matchmove and Razer specifically, to Nisha and Eduard. What is the path to profitability for digital banks, in particular to your cases? Would any of you like to take that?
Should we show our cards? Nisha, go ahead, ladies first.
Thank you. So again, in line with our aspirations, our model has always been precision, focus, and path to profitability. Again, we don't believe in sort of gouging market share or paying for customers, etc. And the model needs to be self-sustaining and generating a clear path to profitability. As such, the business model is constructed to essentially leverage access to large customer pools and customer bases of SMEs as well as individuals. Basically, we're tapping warm, ready customer base and effectively leveraging, the whole banking as a service and platform as a service model to deliver these essential solutions to platforms that everyone's already familiar with. Through this model, we've basically managed to prove that, banking can actually be profitable. We can maintain that firm-focused path to profitability. And again, this is in line with the core Matchmove DNA and existing business model as well.
Yeah, I echo that. We're a very lean organization, Razer Fintech today, and staying lean is very important for us if and when we become a bank. And if you really think about a traditional bank or a traditional insurer, there are tens of thousands of people employed, which is good for employment. However, from a cost-based point of view, it's very hard to sustain. And some of this cost base inevitably gets transferred to the customers. So if you think about the digital model and you take the branches away, that cost is gone. Once you take the branches away, you take paper away, then you don't need operations, so that cost is gone. And when you lean it out, it's really much more basic what you need in terms of service and an organization. So once you run a lean business, then of course you're profitable, but you transfer some of the profitability back to your clients as well. From a technology point of view, like Nisha said, an open platform is also essential. And this is where companies like Jumio and others can partner with us. And once you integrate software as a service components on an open banking platform, that allows you to keep your tech costs low as well. So again, just continues to add up and in terms of profitability and what we can do for our customers.
I guess for the new challenger banks, virtual banks, a large chunk of the cost actually comes from customer acquisition, right? So I guess just a quick follow-up and maybe a quick chime in from both the potential challenger banks. How does your current partnership play into keeping costs manageable for customer acquisition? And then maybe later we can jump to Andrew and Anand to comment on the technology aspect of it.
So our model, as we came out to say recently, our model is very much leveraging what we call go-to-market partners. So we recently took a stake in Shopmatic, which has access to large pools of e-commerce entrepreneurs across the region. So we're essentially leveraging their platform and their base to offer essential and relevant services to these customers. Similarly to Shopmatic, we have actually lined up a series of stellar Singapore corporates which access to large customer base as well as large SME ecosystem. So the intent is to leverage their platform and network and offer essential banking services through that platform. And it's specifically tailored and targeted to that industry, to that corporate, and you're servicing basically very relevant banking needs of their stakeholders.
Yeah, so in Razer, we're not worried about customer acquisition cost. As you know, our strategy is to become the global Razer youth bank. And youth and millennials, if you look at the data, 70% of them are gamers. And we already have an ecosystem which is more than 70, 80 million users around the world. So at the end of the day, we want to tap into that ecosystem. We want to tap into that user base and convert them into bank clients. And to do that, we will leverage our data and we'll leverage our technology. And again, there's a good example, like for example, in the Fintech Festival last year, you could see also how much pull the Razer brand has. I think our booth was one of the most visited booths in the festival. So again, back to the operating model and the profitability is another variable that adds up to the profitability equation, and we look forward to transfer that benefit to our customers.
All right, thank you for that. And Andrew and Anand, do you guys have anything to add to this particular topic?
Yeah, so I think it is an interesting topic, and both Eduard and Nisha said, I mean, there's a difference between acquisition cost and conversion. So, when you can tap into an existing customer base of your own and convert the customers from what they do today to banking customers, and equally tap into the customer bases of partners who are interacting with those partners and convert them to banking, is different from starting a brand new bank with no customers and going for a pure organic strategy, which is a little bit, which has been the more common approach for a lot of the European and some of the US challenger banks. So I think that's one of the big differences we do see in Asia in particular, a much more mature ecosystem part approach, as well as people chasing licenses where they have customer bases of their own as opposed to pure startups.
Cool, thank you for that. And Anand, from your end?
Sure, I kind of echo the sentiments of all three of them, right? At Finastra, we're working with quite a few of the neobanks, both in Europe and in Asia. And you're seeing both business models do exist. Banks that try, a new bank that tries and acquire from scratch customers. They're focused on a very niche segment. For example, the banks in the UK like Razer and Gravity, running on our platform, we're focused on very specific segments with a very clear value proposition, which gives them a high profitable segment and also a segment that's not yet captivated by the likes of other banks in terms of what they want. We're also seeing banks such as Tonic in the Philippines who are coming to market, going in more mass market, so to speak. And they're going to have a higher acquisition cost in many ways. They're also going to say that the underbanked population is so high, it is probably going to be a win-win for both the consumer and the bank alike. So you're going to see a few models depending on the kind of geography. Singapore would be more niche targeting in my view. Vietnam, Philippines, you probably want to go mass. So I think that there are going to be nuances in terms of reducing acquisition cost, higher conversion rates, and entering full profitability.
And on that note, because we often talk about our view from the business model and the viability of a digital bank, but I'm curious to think like what the panelists' views are in terms of the sentiments of Singaporeans, whether it's an individual or an SME. What is their sentiment towards these digibanks? Do they care? Does it matter for them? I believe, Andrew, your team has done some research in this space, right? So perhaps you could illuminate us a little bit on that particular subject.
Yeah, sure, Vincent. So PwC did a survey across Hong Kong, Singapore, and Malaysian markets just to compare and contrast consumer interest on the retail side. So we interviewed 4,500 odd people, and the very high interest and awareness of virtual banks. In Singapore, it was about 74% of those interviewed were aware of it, and 60% odd interested in becoming a customer of a virtual bank. And interestingly, when you unpack that as well, it's much higher amongst younger customers, so up to 73% for 18 to 24-year-olds. And of course, bear in mind, the survey starts at 18-year-olds, so there's the potential customers of the future 18 years and below who have not even come onto the market yet and not involved in the survey. So we see a lot of interest from customers and solving different pain points that they see with existing banks. And we see from that perspective quite a lot of opportunity for virtual banks to initially get a foothold in the market. I don't think it's going to be wholesale switching from day one for many customers, but they'll start opening accounts to trial it, and then momentum will build pretty rapidly. And I think that will be a much higher effect with younger consumers as well.
And I'm not surprised about that, Andrew, because if you look at the banking services that are provided, although everyone has many bank accounts and many cards, the young still feel underserved from a user experience point of view. Like even opening a bank account is the same process for somebody who's 18 or for somebody who's 80. So again, and this is Singapore particularly, I think in other markets, underserved has a different definition, but there is obviously a big need out there to serve them better.
And just to echo that, from an SME standpoint, even as a fintech, you'd be surprised. So I came from a bank where, just to open accounts for fintech startups, tech companies in general, it's very, very painful. And now being on the startup side myself, the challenges and pain points that aspiring startups, tech companies face in getting any form of relevant banking services is a huge pain point. So for us, we see ourselves as the go-to fintech bank of choice. We understand the pain points. We've been on that journey together. We understand the evolution from seed to startup to growth stage, mature fintech.
I think we may have lost Nisha a little bit over there, but I do think it's fascinating that of our panelists, both of Eduard and Nisha were also ex-bankers as well, so they should be able to tell us from both perspectives, and that makes a nice segue into one of the other a thematic question by some of the people in the audience. I guess they are kind of wondering, with all these open banking platforms, all these technologies also available to incumbent banks, what can set a virtual bank apart? Because there were also a few studies, right? Like S&P said incumbent banks will have a leg up, while studies from McKinsey is saying, the incumbent banks need to reinvent themselves, or Razer or Matchmove might come in and just make them go extinct, right? So what are your thoughts on that? If anyone might want to share and chime in on that.
Yeah, I think we're in a time of change, and a lot of the existing incumbents will change, and some of them will change faster, some of them will change slower. I think if we roll forward 10 years from now, the companies that will eventually survive will look similar. I think the only difference is the starting point. Were you an incumbent who transformed, or are you somebody who came new to the market? But at the end of the day, the services delivered will need to match the expectation of the next generation. So I think speed is of importance. And I'm a firm believer that in 10, 15 years from now, the landscape will change significantly. Some of the incumbents will not be around. But on the other hand, other incumbents will leverage all this and will be even stronger. And probably part of the model 10 years from now, partnerships and ecosystem play will be very important for both the incumbents and the newcomers.
So you're saying that it's not unilaterally that the incumbents will have a disadvantage or an advantage. It just largely depends on over this next few years what kind of steps they take to. All right, cool.
Absolutely.
And Anand, from a tech provider viewpoint, what is your stance on this? Because you provide technology both to the new breed of banks and also the incumbents as well, right? So how does virtual banks set themselves apart?
I kind of echo what Eduard said, right? There's always going to be the elephants that will learn to dance, which are your incumbent banks, and they will do so very well. And there will be new startup banks that will come in. And the view 10 years from now is going to be a blend of both. And as Finastra as a platform provider, we want to play in both spaces, right? To be very candid, right? We are going to bet on both sides of the fence. We are going to bet on the incumbents to give them a lean, agile platform to embrace fintechs and help them dance. At the same time, we are going to partner with fintech, with challenger banks to create their banking systems with our rich experience that we derived in banking over years to build a very lean, agile bank to make them successful. End of the day, my personal belief is going to boil down to execution and strategy, deciding what target segments are going to be important, be the focus areas, and how fast can somebody execute towards that end game to be a very compelling financial services provider, having share of wallet of consumers to be their first choice for the next 10 years. And as a platform provider, we want to play in both sides, and we want to help the end consumer they have the right outcome. That's our end game.
Okay, cool. And Nisha, do you want to finish your thought earlier before you were slightly interrupted by technology?
No, I just wanted to say that as a startup ourselves, we very much understand and appreciate journey and really able to digitally serve these startups along their growth path. It's something that we aspire to offer a little bit more holistically.
All right, great. And Andrew, do you have anything to add to this topic before we move to the next one?
Well, I think one of the things people talk about a lot and comes through surveys like ours as well is the advantage of trust that incumbents have. And again, this plays a little bit to sort of difference between pure startup business model versus someone moving from an adjacent business into banking. And I think trust can take a long time to build from scratch, but if you're already starting with a brand, with customers who have a degree of trust, potentially in a related or different market, that's something you can pull into the market, which will allow, again, new entrants with those business models to accelerate really quite quickly and to start to match some of the incumbent advantages, particularly around trust, and build a trust base themselves in banking.
Well, how do you build trust, though? Because I would imagine there is quite a sizable of the demographic out there who, view some of these new players as, this is a fancy new startup. Will they still be around? Of course, there are regulations in place to ensure the kind of protection, but I feel the general consumer may not be 100% familiar with that, right? So, how does the new banks build trust against institutions that's been around for hundreds, if not decades, right? Hundreds of years, if not decades, right?
Yeah, and some of this, I think, depends on the demographics as well. Sorry, Nisha, because I think, certainly older customers will have that inherent trust in the people who've been around for a long time. I think that doesn't apply to anywhere near the same extent for younger retail customers and SMEs as well, in terms of startups who may have not had great experiences with bigger banks. So I think, again, there's opportunities to bring new customers into the market, retail and SME, who don't have that history and that legacy of the trust deficit. I mean, it does play a big advantage. As well as trust, there's also inertia. There's a lot of people who go, oh, well, that might be interesting what that bank's doing, and I might go and play around with it, but they don't quite get around to it. But I think that's different, again, at the younger end of the spectrum, where people will be much more energized to try things which are new, and particularly with brands they're already aware of and have trust in already.
And Nisha, you wanted to add some points to that as well?
Yeah, so just to add to essentially what Andrew's saying, firstly, you get to the customers through brands and platforms they already trust. Two is, if you're already seeing a gap in their service quality, whether we can offer a more relevant and better product at slightly more cost-effective measures, these are all ways essentially to build trust. And that's essentially how we see the value proposition of the digital banks, not to take away from legacy financial institutions. They still have a part to play. But there are certain pockets where neobanks are better served to address and plug these gaps. And
I guess the follow-up to that is that, if you look at UK, and one of the audience has also brought this up as well, a lot of these neobanks, the consumers are still using them as a secondary account versus being a primary account. So I guess the question is it important to be a primary account? If so, how do you transition the users to trust you and to enjoy your services enough to make you your primary account, right? So I open this question to anyone on the panelists who would like to take it.
I think it is important, yes. And back to the trust, I think it's also a show of trust if somebody uses you as a primary bank, right? But to make that happen, you need to have a compelling value proposition. And again, goes back to user experience and personalization, because in today's user experience with incumbents, typically the online or mobile experience is very, very transactional, and there is very little engagement. I think if we could do a better job in terms of engaging the users, giving them a much more better experience, which is tied into their lifestyle and also cater to their financial needs, then trust will build, and also they will find our value proposition more compelling, and they'll use us as a primary bank.
Just
All right. And
to add to the trust question, yes. Anand, is trust takes time to build, right? And somebody just pointed out, trust is earned in drops, but you lose it in buckets, right? That's a very important point. So as a neobank, you're going to earn that trust. And to Eduard's point, right, it'll take years before people switch from primary to make it primary. I think Revolut, Monzo, and the bigger ones are at that cusp at this time. But if anything happens from a security or any other perspective, that trust is immediately lost, and to recover that trust takes a very long time. So I think what we have observed working with our challenger banks is different strategies, right? One is the user experience. One is really the focused products where there is a gap, where you can build trust faster. And you can build trust faster as a bank. You're getting them to switch to other savings and CASA, which are more your commodity products, become easier. Otherwise, it's just going to take, the friction is going to still take you a longer time to do so. And it's very important to focus with a platform that really provides very high security, because in today's world, cybersecurity is very important to build trust, be it incumbent banks or be it neobanks. If that is lost, the bank is lost.
And I think it's an age-old wisdom to link security, reliability to trust. But just to play a little bit of a devil's advocate over here, right? We've seen instances where, without naming names, right, there are incumbent banks who has been charged with anti-money laundering almost on an annual basis. We've seen banks with security issues. We've seen, even outside of the financial world, like we see Zoom having all this privacy and securities issue, but yet, user base doesn't seem to be largely that affected. So is security really that important to consumers as we often tout? Is this something I always wonder?
I think it is important, and everyone has a role to play. And again, I look at security as table stakes. And I also agree with the point that trust is hard to build and easy to lose. However, you need to strike the right balance in terms of how much you lock down processes versus what is the user experience, right? And again, I'm not saying we should have an unsecure user experience, but on the other hand, you can offer a good user experience while being also secure. I can give you an example. So for example, in the insurance space, before giving a policy, you do all this work on underwriting, right? And at the end of the day, when you look at fraud on the other side, it's very little. So can you change the process, approve a policy faster, sooner, better, and then later use data and analytics as a post-approval to see if there is a fraud or not? So you still have a secure process, a secure product, a secure system, but the user experience is much better.
Okay, thank you for that.
And I think the point is that some people, in many cases, people hide behind security and compliance, and they don't offer the best user experience they can offer. So let me be a bit controversial.
That is a common argument, isn't it? Like security regulation, that's why we can't innovate. That's what we often hear. On one of the other questions that we're getting from the members of the audience, and I think it's a good point as well, we are a digitally savvy population among this group of panelists, right? But not necessarily all demographics of society are digital natives. So some of the audience were wondering, with some of the demographics who still prefer checks, prefer cash, how do Digibanks even attract them, or should Digibanks even attract them in the first place? Anyone can take this.
Yeah, so my view of it is, I think it will take a little longer for some demographics. But where I live in Bangalore, India, and for example, my maid who is illiterate uses WhatsApp for everything, uses Google Pay to make payments, right? And these are demographics 4-5 years back would have never been digital. The fact is, some of these consumer-grade channels coming out, WhatsApp is a great example, Google is one more, are actually democratizing the entire institution of how people communicate, collaborate. And I actually think COVID-19, much as it hits harder to some demographics, we all know that, it will actually accelerate some of these demographics moving digital because of the fear factor in many ways. I hate to be a little controversial on this point, but I think these are things that will happen. So it is going to happen, and we should not think, and I agree with Eduard, if you have a great user experience, it will cater to a wide variety of demographics. So we should not be scared. Simple is better in many ways. Simple, secure, trust will make the world come around.
Yeah, I think good user experience is infectious, right? It is viral. Sorry, Nisha. I think you mentioned WhatsApp. My favorite example is TikTok, right? So if you look at the demographics of TikTok, I'm sure the guys went after the youth and millennial, but now every grandma and every grandpa has TikTok clips. So if you make it easy to use and you provide an awesome user experience, I think it transcends any kind of demographic.
That's a good point. And Nisha, you wanted to add something as well?
Yes, and you also drive adoption to use case, right? So one is, yes, the user experience is great, it's user-friendly, it's seamless, but also on the use case. So for example, in a COVID-19 situation, I need to effect essential banking services. I don't have access to a check, or I can't deposit a check. What do? You turn to alternative resorts. So basically another way to drive adoption, and this is where Digibanks will flourish, is essentially through use cases that they can enable, right?
That's true. And, we talk about user adoptions. It's often a curve, right? You work on the early adopters, then the laggards will come in. I mean, even when we look at an older example like Facebook, 10 years ago, we used to say, and a lot of banks were like, should we even have a social media account? And now it's the older people who's like sending you all this like game requests and whatnot. So it's essentially just a curve and how user-friendly it is, right? So moving along, does anyone else has anything else to add to this particular topic before we move along? No? Okay. All right. So I think another question is that one of the pain point for expats is that it's quite difficult to open bank accounts across various countries. And does Digibank help to address this particular issue? Because some of you guys might only be operating within one particular geography, right? Would anyone like to take the question?
Cross-country bank account opening, there are regulations in place. However, some of it can be overcome again by offering a good user experience, and some of the incumbents, some of the global banks even do it today. However, opening one account from one jurisdiction to the other jurisdiction, you need to be very mindful of the regulation. So that's not a technology problem.
Okay, all right. So the other thing is that if we look at the kind of justification for virtual banks, and as you've also rightly pointed out earlier, is that every region is different. So of course, if you look at areas like Philippines, financial inclusion is a big issue over there in which the new banks can solve. So particularly to Singapore, what are the main gaps that you guys feel Digibanks need to address?
So again, from our perspective, we see the fundamental gap with, tech companies, startups, very similar to us, and the ability to get relevant and credible and deep holistic solutions that are relevant to them. Then the second point is, or the second market that we're also seeing gaps in, is the SME, micro SME space, right? And even with our existing platform today, where we deliver, whether it's payment capability, supply chain management, we are seeing basically there is a pent-up demand and pent-up need for a more holistic and viable banking solution that maybe the incumbents don't offer and maybe don't offer so well digitally. So these are some of the gaps that we're sort of seeing, even in a market that's very much banked and mature like Singapore.
Yeah,
I agree.
I think to build on
there are
point
segments which... Go ahead, Andrew.
Sorry, I was going to just build on Nisha's point, and I think you mentioned it earlier as well, Edward. I think one of the fundamental gaps is that digital banking as it's evolved to the point today provided by incumbents is very transactionally focused. So you can efficiently get onto most digital banks and transact pretty much anything you want to, but you don't learn a lot and you don't get a lot of insight in terms of a user experience. So I think the big gap, whether it's for retail customers or SMEs, as Nisha mentioned, is being able to, one, educate them about their finances, provide insight around that, and provide advice in a digital setting. So that advice doesn't necessarily just need to be something that happens offline. It's about how do you build it into an end-to-end customer experience and journey so that it's transactions, yes, but wrapped around that is a lot more education, problem solving, and insights.
I agree, and it's also beyond user experience. It's also about the product design. So both in the consumer space and the SME space, there's a lot of opportunity to serve better. So for example, in the SME space, if you want to get a loan, you have to bring collateral. So how about we bring smart credit scoring to the table and we can lend money to SMEs without a collateral? Just a very, very simple example. Same in the retail space. From a customer experience point of view, you rightly pointed out, Andrew, that it's sort of the same customer experience if you're 18 or 80. However, from a product, again, the products are not necessarily tailored to being 18 or 80. There's very little product tailoring. And here again, with smart use of data analytics, you can tailor the products better.
Yeah. And just to add to that, right, I agree with both Nisha and Eduard are saying. But I think I want to focus on the SME sector for a little bit. The SME has been highly underserved from a banking experience, and globally, and it's been true in very strong, rich markets, including the UK, where we're working with some banks with our platform, as well as in Singapore, Hong Kong, and so on. Nobody has really thought about fully the day in the life of the SME. What are their banking challenges, literally speaking, and what are their work challenges, more interestingly, from supply chain finance, from invoice discounting, from credit, from short-term credit, rollovers. Nobody has thought about how that affects their daily life, their cash flow, liquidity, and everything else. And in the post-COVID-19 era, this is going to be more pronounced because some of the liquidity challenges, all of these pieces are going to be more and more pronounced. So I think there's a huge opportunity in the work that we've been doing with Gravity River, with our platform, visionfabric.cloud, is really starting to prove that out, is saying that think of those journeys, and that can be a huge differentiator for an SME and hence onto a challenger bank, right? You think customer in as against bank out.
All right, cool.
Yeah, and
anyone else? Go ahead.
So, if you look at it in the current situation where SMEs are under huge pressure and governments and banks stepping in to try to help them, but when you're talking about very small businesses who are trying to go around multiple banks to see who's going to lend them money, whether or not it's government backed and part of a government relief program, that's a huge ask for people who've got limited resources to put in different application forms, submit different forms to different banks. They can really spend a lot of time having to do that. Time they don't have, particularly in the current climate. So I think finding digital ways to simplify those SME lending processes, as well as their overall banking journeys with more insights about how they run their business, how they manage their cash flow, is really critical, particularly in the current time, given the situation.
And that also relates to one of the questions that the audience is asking, because fundamentally, if you look at SMEs and startups, they are inherently a little bit more risky because they may not have the same kind of track record. So I guess one of the audience members really trying to understand, like specifically what data points can Digibanks can look at it when it comes to credit risk versus what an incumbent bank would typically look at. Feel free to take the question, any of them.
So maybe
your typical
start.
credit scoring model these days with an incumbent is you look at the balance sheet, you look at payments, and that's about it, right? And of course, you look at collateral. However, modern credit scoring algorithms can bring data from different sources. I give you an example. If you live in a certain area in a city, I can predict that you are a better lender or somebody who takes a loan than if you live in another area in a city. So demographic data can contribute to that. Social media presence can contribute. If you're a graphics designer and you have a lot of followers and people actually actively buy your work, then again, there's a high chance that if you take a loan, you will pay it back to the bank. So I think there's a lot of opportunity in the SME space to use, again, data analytics for credit scoring and to help SMEs get access to loans that they cannot get today.
And Nisha, I think given your recent acquisition, you have some additional data points that maybe you could also use to analyze the credit risk, right? So any insights in terms of how Matchmove could potentially analyze credit risk a little bit differently than an incumbent bank would?
Yeah, so leveraging, the Shopmatic collaboration that we have. Firstly, we've got data. We can power the banking as a service wallets for Shopmatic, as well as the end entrepreneur that's using on the Shopmatic platform. So we've got data through our platform. We've also got Shopmatic's data on the e-commerce via whether they're selling on the Shopmatic platform, other multiple marketplaces as well. So I have visibility on, whether it's invoice or stock coming in, I have visibility on sales. And because we also control payments, firstly, there's, number one, I credit score you a little bit better. I see your flows and transparency. And in terms of managing risk, you are also able to see or have visibility on cash flows that are coming in as well. And maybe there's a way to, manage cash flows or manage repayments a little bit better. It doesn't have to be a standard, monthly end of month payment. There are alternatives for more innovative and creative ways you can manage that, basically tying that back into the seasonal or the cyclical effects of the e-commerce, which we have full visibility because we also manage the payment platform. So that basically gives us, I guess, deeper insights than a traditional or income bank potentially wouldn't have.
Excellent. And Andrew and Anand, have you guys observed from the clients that you work with different data points that they look at in terms of credit risk? Andrew, do you have anything? Or maybe Anand, do you have your observation?
I think yes. I mean, the people are starting to look at it, but I think it is an area where virtual banks can really differentiate, because obviously it becomes a legacy issue and difficult for the incumbents to change credit models and credit processes and procedures that have existed for a long time. I think if you look at the China market, which we haven't talked about so much, but that's really blazed a trail in terms of this new ways of doing underwriting using data. Obviously, there's some advantages of the way the economy works in China, which enables that. But those are some of the examples of being able to do things really fast in terms of making credit and underwriting decisions and actually drawing down funds, within minutes of doing applications.
And I think I think this post-COVID will accelerate that. Will accelerate this dramatically. When the economy starts opening up, there will be a huge pressure on SMEs. Governments are going to be influenced. They're going to give loans and everything else. There's also a data point which will help enrich or at least baseline some credit scoring, frankly. But I fully agree that it's going to be far more machine learning and algorithms and credit scoring that's going to come to bear on this whole lending space to accelerate decision making based on various factors. And it's going to be very local, based on country, segment, demographic kind of industry, right? At all of those things. People will be much less inclined to give loans to travel agents, I guess, the next 2 years than they might for a different kind of business entirely, right? So these are things that are going to happen. And online banks, I believe, are more suited to make those changes in a much more agile fashion.
Okay, thank you for that. We only have about 10 minutes, so I will end this session with a difficult question or a potentially challenging question. An interesting one that the audience have brought up is how does cryptocurrency fit into the roadmap of digital banks, especially when you look at a big chunk of central banks actually looking into central bank-backed digital currencies. So in the view of the panelists, how do you guys think this fits into the whole digital banking conversation? Would anyone like to take that?
Well, let me try, right? So I think the answer to the question is, how does digital currency fit into daily lives?
Yeah.
So in the moment when digital currencies will become country currency, I think then every bank will have to operate in the digital currency space as well. So until digital currencies are not going to get regulated, I think it's difficult as well. However, it's not impossible. So that's what I'm putting out there. I'm curious about other views.
So just to
Does
also
anyone
build
have
on that,
Nisha?
yeah, maybe it's not transactional in terms of, yes, I can go and use digital currency to transact very seamlessly, but there are alternative products that you can build on that, right? And a lot of exchanges are looking at, whether it's ICOs or using crypto as an underlying asset. So one of the things that we are, that we could potentially look at or contemplate is using crypto as a base where either wealth or lending products are built on. So those are some interesting models that potentially could spark with a digital licensing model. So while it may not become transactional currency, so in terms of day-to-day trading or transactional behavior, you could see some exotic, whether it's wealth or lending products, be built on top of crypto as the underlying asset, which is actually quite interesting. So people can leverage up, like how you leverage, in a private bank, you would leverage the assets that you're currently holding to build on. You could leverage the assets that you currently hold in crypto to be able to, monetize that a little bit better.
Yes, that's an interesting possibility. Anand, Andrew, do you guys have anything to add?
Sure. So my point of view is similar to Nisha's, right? It is going to be a niche product, is my view. Will it be a broad-based currency like the way we use current currencies today? The business need is just not there. The business need to, from any perspective, be it user experience, user acceptability, any of those things, is just not there today. To be a niche product in specific domains, yes, and potentially there's a good use case for that. So I still think it's going to be niche. Funnily enough, with COVID-19, you look at investors, they're moving right opposite into gold, which, if you go back in time, 3,000 years, was the original start of the banking industry, right? So we've kind of pivoted full circle, or rather 180, from crypto to gold. So I just think it's going to be a niche product. And I just think as a platform provider, Finastra, we want to make sure that we have support for all kinds of currencies, be it crypto, be it gold, or anything else. If we want to hold it, we need to support it. And every banks need to support it, what the customers want.
You may be getting a lot of messages from crypto enthusiasts very soon, Anand. Andrew, any thoughts on this subject?
Yeah, it is an area where it looked like it might move a lot faster in terms of converting to, I guess, digital fiat currencies. But that's not happening as quickly in most countries as people imagined. And that sort of plays to Edward's point about day-to-day transactional usage. So that still seems quite far away. I do agree that there is opportunity for investment, but particularly, I think there's interesting use cases around funding SMEs using crypto assets, crypto offerings as a way to accelerate funding of small businesses. as well as interesting wealth management plays. I think those are probably, as the other panelists have said, where the short-term use cases probably sit.
All right.
Yeah, so I read an
Now,
article today during the lockdown in Spain. Now you see neighborhood currencies because people are locked down, so cannot transact. So they come up with their own currency. So that's a possible future as well when you have multiple currencies. And again, crypto is just a technology to implement them, but there can be other currencies as well, right? Whatever holds value can be a currency. But I still believe that, like, back to also Andrew's comment, making it a fiat regulated by the central bank probably would help with the adoption of crypto overall.
okay. And thank you for that. We have a couple of minutes left, so maybe I can invite the panelists to share their closing thoughts, just a quick 1 minute comment. Maybe we'll start with Nisha, Andrew, Anand, and Eduard.
Okay, so
Nisha?
firstly, Vincent, thank you for inviting me on panel. It's been a great session. I think just to bring it back to incumbents and digital banks, having been on both sides of the fence and actually in an incumbent that subsequently launched the digital bank, I think there is room for everyone to play. I think from a regulatory standpoint, their focus is really about addressing the currently unmet or digitally underserved segments of the market while protecting stability of the banking landscape, right? No one wants to see, gouging for customers or imbalance in the banking landscape. As a result, I really believe that there is a place for incumbent banks and digital banks to sort of coexist symbiotically. And I think the unfortunate impact of COVID-19 has maybe accelerated the adoption of digital payments, which could also see a swing in digital banking, adoption and aspirations. And again, it really is about serving the underserved with a relevant offering that makes sense and resonates with them in a user experience that, it's something that is compelling and seamless and integrates quite seamlessly into their day-to-day lives.
Great. And I lost the order I gave out earlier. I think it was Andrew was next. Andrew, any closing thoughts?
Yeah. Look, and thanks, Vincent. Thanks for facilitating and having us here. I agree with Nisha. There's room for everyone. I mean, I think the fundamental question of the session was, will Digibanks change Singapore's banking landscape? I think they will. They will drive innovation, which I think will be good for everyone, for all customers in terms of SMEs, retail customers, to really have new digital banking experiences beyond what we've had today, which people have got very used to these sort of transactional experiences with fairly common standard products. I think the exciting thing for all of us is going to be the innovation that new banks bring to that and the way incumbents respond to it.
Cool. And Anand, any closing thoughts?
Yeah, thank you, Vincent. Thank you for facilitating a great session here. Totally enjoyed the views of all my co-panelists, and thanks, everybody. What I would like to say from a technology provider, Finastra, we really want to provide the best possible platform that facilitates this kind of innovation with digital banks and their end consumers, be it user experience, security, cloud, or a platform that enables open banking. And we do that through our cloud core banking system and our cloud platform, which has got all of these fintechs around it. And we really want to play, and we are playing an important role in the challenger bank, neobank ecosystems in several countries. We want to continue to play that role going forward in all of these markets and countries, because I think that's going to be a very important piece of how we can help all sides of the table, be it the bank, be it the end consumer, and probably find to provide a better banking experience.
Great. And Eduard, any closing thoughts?
Sure, and thank you from our side as well for inviting us, Vincent. I think the question is, will Digibanks change Singapore's banking license? Absolutely. And I think the biggest change will be, and I think my friends here have pointed out as well, is the coexistence of incumbents with new players. And at the end of the day, working together in offering a better user experience to our users. I think the word disruption is being used many times. I don't think it's about disruption. It's about open finance, open platforms that, again, can bring better services to the underserved.
I think, yeah, to close off, I think in the next few years would be really one of the most interesting times within the financial services world, right? Because we've not seen that much regulation to permit for all this new disruption and innovation. So it'll be really interesting to observe. With that, that only leaves me to thank our honored guests and panelists for joining us today. Special thanks for Finastra for also working with us to organize this session. We'll also be doing one in Malaysia in 2 weeks' time. We will keep all the registered participants for this session posted. Do feel free to join us if you are interested to learn more about Malaysia as well. So, ladies and gentlemen, thank you all for joining us. Have a good afternoon right now, or good evening, or good morning, wherever you're from. Take care and have a good day.